Hey, good morning, everyone. This is Kirk here again at Option Alpha. This is the members only update. So, welcome to November and first day of the trading month. And looks like we're going to have a pretty rough day for the markets, which is actually good in my opinion. I think that stocks need to come down a little bit more. The rally that we saw last week, I think, was a little bit too overextended for many reasons, but it just can't continue at that pace. So we saw a good sell-off yesterday. Um, Pre-market futures are already down about 2.5% on the S&P, and actually just in the last 5 minutes that I've started recording this video, they've jumped down another 0.5% from where they were this morning. So we'll see where things go. This is mostly on all the news out of Greece about the referendum vote, and pretty funny how everything was hunky dory and to the moon the other week, and now the real truth I guess comes out. That really there's no plan. It's just a kind of verbal agreement, and a lot of things need to happen. Some recapitalization of banks, et cetera, et cetera. So we'll see where this goes. I think the market is just generally very susceptible to any sort of potential bad news. I mean, really, things just have to continue to go right, 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 right. Anything that may derail it is going to be really tough for the markets. And of course, we have the Fed speaking this week and QE3 possibly on the books. We have unemployment numbers, which will be a major, major market driver. So we all just need to take a step back and position ourselves. Make sure you have all your stops adjusted, hedges on appropriately, and take it one day at a time. So wanted to go over just a quick recap of the current positions and then the new position that we're putting on this morning. I didn't think we were going to add a fourth position for the naked puts and calls portfolio, but the recent jump in volatility and clearly this morning the market being down another 2.5% pre-market, at least as of the time of this video, makes it pretty compelling to add another position for November expiration, which is just about 2 weeks away now. So for our portfolio, we have an SPX 1050, 1045 spread on the bottom side. That looks to be pretty safe right now. We're entering another position at a 100 strike on the SPY, so a little bit safer position moving away, and that's only because it's a naked put and call. We don't have to buy that other leg and get closer to the market, but again, this is below the lows of October and September, so I feel confident even if the market does spark some sort of sell-off, it won't get down there in that time. On the RUT, our only other credit spread is 810, 815. This one's actually doing okay, and again, doing even better now that the market's continuing to sell off a little bit, giving us a little bit of breathing room. That move was just too much, and you can see here on my chart that what I think we have going on the RUT is two things. One, I think we have just a very simple retracement of this breakout, this kind of topping pattern that we had that broke last August, and here's the break, and here's all the support areas. So it's bounced off of this line at right about 780 a couple times before, and so now it's coming back up and retesting that area as resistance. I guess it's a very typical, so not unlikely that a stock will do this. That will run away really hard and come right back up all the way, seemingly starting a new trend, and hit that level and retest it and reconfirm it as now new resistance. So that's what it seems to have done now because we're running away from that level. But what we do have on the Russell right below us now is this wedge pattern that we broke out of last week or 2 weeks ago now. So it's likely that the stock market, or at least the Russell, can come down and retest that area at least. Come back out again. It's broken out of this wedge pattern. It's now moved and extended out. These patterns have a very high likelihood of a throwback or a pullback. So once they break out, there's a good chance that it's going to come back down and at least retest one of the areas down here before continuing the next trend. So again, that's the whole reason that I wanted to enter this 810, 815 originally all the way down here when the market was down in the 600s. But give us a lot of room, a lot of barriers to get through for the market to hit our strike. So very confident about that position as well. The SPY, I'm glad that we rolled it early. With high volatility, or with fairly high volatility and movement, pretty good pricing on that roll. A little bit of a spread difference as far as a debit, But I like the roll early. I don't want to roll after it gets beyond that. And I talked to a lot of members about that in emails and comments on Trading Alerts this past week. But I'll just reemphasize it here is that you don't want to roll any sort of spread or naked option once it's in the money, because now you're fighting with not only extrinsic value, which is basically time decay and volatility, but you're also fighting intrinsic value, which is the value of the option right now if it was exercised. So you have two things working against you, and in all likelihood, you're not going to be able to roll that to another strike and get even close to the premium that you had originally. So what it creates is it creates a wider spread, and you just basically roll for a bigger loss than if you were to roll early and take a small hit or take a reduction in your profit. Again, I still like this position. I think 134 is good for right now. We'll see what happens later on this week with jobs and when the Fed speaks, if QE3 comes out, and adjust as needed or hedge as needed. Right now, we're trading in the 122 range on the S&P this morning, so we've come back inside this breakout of resistance here, which was my major level, and you could actually see it a little bit better on the S&P. But this major level here at 1225 is where I thought major resistance was. We had trouble getting through it, but we did get through it. And now we're coming back down inside that range. So it's going to be really critical today that we watch 1225 on the S&P. That to me is going to be the barrier. If we hold that, we could start to base a little bit over the next couple days and then continue higher. If not, then we'll start to break down and start heading towards 1125 is really the major support level after that. Getting back to the S&P though, the 100 strike put is the put we're entering today, this morning. So take your time with the entry on this. Obviously, the market's continuing to sell off. Just a quick check of the futures. Yep, we're down about almost 2.5% still this morning. So take your time on this position. You'll have some good volatility. I think 15 is a fair price. I think you can probably get it maybe a little bit higher if you just take your time this morning and this afternoon and see where the market goes. But I think 15 is a fair price for it. Good return on our money. Safe position for 2 weeks or so to go and expiration. So I think that this is a really safe position. I like it. I like adding it to our current 134. So for some of you, the margin may be a little bit reduced because now you have two positions on the SPY, but we didn't factor that in with our calculation. So we're assuming that you have to have the full margin for this particular trade. So again, slow and steady profits on these trades. It doesn't seem like a lot, $15 out of 1,000, but it is a really, really good trade for the amount of time that you have your money invested. So as always, I hope you guys enjoyed these videos. Let's see where the market goes this week, and happy trading.